Much, Nikki. And thank you very much for the team for organizing this wonderful event. I'm Angel, and I'm very delighted today to be invited to share on this topic of macroeconomics outlook and sustainable development goals. And I think today's sharing will be covering three parts. Here we go. So there will be three parts. First, we're going to give an assessment of current macroeconomic, how is it everything going? And secondly is about the United Nations SDGs, which is what I could share my interpersonal experiences with you as someone who's worked in the United Nations and is working on communicating, helping more private companies to have more conversations with the United Nations and conduct projects together. And thirdly, we'll share a little bit of my understanding and my thoughts on sustainable finance and ESG. So why don't we start first about the general assessment of macroeconomics. So as you can see on my screen about the global economic outlook, I think this is very interesting to find this out from McKinsey just released this report about 2 days ago, and it's about the pandemic, which was the biggest influence over the last 2 years as to the global market. COVID-19, however, for the first time in 2 years, the pandemic has not been cited as the top risk to global growth. However, we still have to keep in mind that COVID, especially Omicron mutant strains, continues to spread around the world. And I was just gonna share with you, since I'm in Shanghai right now, because Shanghai has entered a phased lockdown on March 28th, and which could lead to another shock to China's economy, as from Tesla factory to the SMEs are all temporarily closed. And Shanghai's economic output accounts for about 4% of China's GDP. Shanghai is also the hub of semiconductors, electronics, and cars manufacturing. It is also the world's busiest, one of the world's busiest shipping port. So we have to understand that the lost business at retailers and hotels and restaurants could directly cost Shanghai 3.7% of its annual GDP. So I'm trying to address that the importance of COVID is inevitable and it is still going on. And then this is the Shanghai, under COVID at this moment. And we're, I just want people to keep in mind that it's, although not the top one thing, but it's still affecting us. However, what becomes the top thing that's a top risk to growth, according to this research, Russia and Ukraine's impact is the largest threat, potential risks to the global economic growth, as it arouses geopolitical instabilities and many conflicts that are going on. And I think the main impacts will follow through three main channels. So first of all, one is that higher price for commodities like food and energy will push up the inflation further, in turn eroding the value of incomes and weighing on the demand. And secondly, neighboring economies of Russia and Ukraine in particular will grapple with the disrupted trade supply chain and the remittances, as well as a historic surge in refugee flows. And thirdly, I think it's also Thirdly, I think it's very important to consider is that the reduced business confidence and higher investor uncertainty will weigh on the asset price and tightening the financial conditions and potential spurring capital outflows from emerging markets. So Russia and Ukraine are major commodity producers as well, and disruptions have caused global prices to soar, especially for oil and natural gases. Food cost has also jumped for wheat for Ukraine, and Russia makes up about 30% of global export, reaching a record. I think third part is to consider that it is impossible to talk about, a global economic outlook without addressing the important the proverbial elephant in the room, inflation. For decades, the significant price growth has already been, existed in major markets, and suddenly a surge in demand coming out of COVID-19 recession and coped with the supply chain disruption and labor shortage could create, a storm for the price increase. And there's just so many factors we have to consider when we're talking about global economy. And then let's jump to something that's more cheerful and that we can look up to. And that is the UN SDG. The United Nations has called on actions for like 17 sustainable development goals. And each goals has also have metrics to measure exactly how to do them and what are the metrics, how to evaluate them by. So the sustainable goals is to ensure by 2030, everyone could enjoy peace and prosperity. And here, I think due to the essence of the forum, we'll focus on the topic of decent work and economic growth, which is SDG 8. The development of SDG fall through 4 conferences. So the first conference was, in the last century, in Stockholm conference is when first people were paying attention, were caught to pay attention to sustainable development. That was the first arouse of interest or understanding of the topic. And then secondly, we had the Rio conference, which happened in 1992. As at that time, people starts to try to draw some rules on how do we measure sustainable development. So CSR was one of the considerations, one of the result that came out from the forum as people are putting them more into their judgment in terms of business. And then later we had World Summit on Sustainable Development in South Africa. And of course, the UN's Conference on Sustainable Development, where we see that specific metrics and implementations has really been put into the section of sustainable development. And I think it's very proud to say that this time, not only did China achieve its high in the Winter Olympic, but also this time the Olympics was the first time in Olympics history where all venues are covered with green electricity and low carbon. So a lot of the things there were recyclable, sustainable, and the build has been proven that value-based and moral-based investment and projects can receive good results and implement further. And 3, we jump to the topic of sustainable finance and ESG. Sustainable finance, I think this is a very interesting point of view to jump out that as the traditional investment, the primary focus really on the financial performances, which we got the business school students are a lot more professional than me to talk about the financial outcome side. But then I think it's really seeing the wave that has been encouraging the ethical, philanthropical, the corporate social responsibility side into the investment, where we lead to at the same time, while we have the desired financial returns, we also have the positive social and environmental and governance outcomes. So it's really a balance of these two and a collaboration of these two. So so sustainable finance, basically right now, the most common evaluation or encouragement is on ESG, environmental, social, and governance. And I think when we talk about sustainable finance, the most important to me is to consider how do we better link the SDG targets to better the financial outcomes, so we can further the convergence of environmental and social progress alongside the financial profitability. because along the way, we see many challenges that are coming, like greenwashing, like lack of clarity, like the convergence of financial and non-financial information. Those, because this is such a new topic, a lot of rules hasn't been set. We see that European Union, the North America and Hong Kong has been the leaders in, the front runners of ESG, but we still not yet have like a global regulation or global metrics to talk about the area. So to address these challenges, I think that there's at least two things that we would suggest. First of all is policy. So the intervention that policymakers and regulators, the decision makers could really encouraging the topics of greenwashing, the prospects of greenwashing over time to address this issue, to avoid the greenwashing issue. And also consistency and generalization, which one side we have the policymakers and then another side we have the standardization of rules, so that this could all encouraging transparency and further encouraging the convergence of the financial and non-financial information to really address the challenges of possible greenwashing and lack of clarity. And to put into the relationship between finance sector and sustainability. I think when we talk about sustainability, especially in the United Nations, I have to address to everybody that there's a huge gap, and we must need the private sectors to also participate in the SDG goals, because there is a financial gap of how we are able to implementing SDG and how much the financial asset that we have for this the SDG proposal. So I think in order to achieve this agenda, we have to initiate the point, the power of the side of the private sectors to provide capitals to acting as examples for others to follow and supporting government efforts to build more socially and environmentally sustainable economy. And recently, we see that companies across financial sectors have committed to sustainability through that funding companies and activities that have positive impacts and encouraging others or their investees to better managing their impact and impact investment. So managing and disclosing the social and environmental risks that they are exposed to, and establishing collaborative initiatives and developing new financing instruments, and calling on governments to take further actions to climate change and biodiversity issues. So those are all significant issues we have to consider, while at the same time, there's a lot of barriers we need to progress. Such as the balance, like we were saying, such as like there's a lack of demand from the customers and clients, and mostly we see participating in ESG are mostly the people who are the public companies. A lot of pressures has been put on the public companies, but at the same time, we need other sectors to also participate. And then further on, we jump to so this is just to share with you about the sustainable finance initiatives that you can see right here. A lot of them are the United Nations led, and our companies do help people to help other companies who are interested in participating in responsible investment, impact investment, and their reputation management and CSR communications. As you see that there's several sustainable finance initiatives have been established to support the incorporation of sustainability considerations into the activities and decision-making process of financial institutions, so that the PRI has been very effective and influential, and the UNFI, I really encourage people to look at it, because it's also very insightful for people to join in the world, and also understanding that the ESG investment, there's a lot of like also online courses you could take with the United Nations on sustainable finance, which myself find very, very, very helpful and interesting just to share with you. And yeah, and then there's the recommended reading list, which myself find very interesting, and I encourage everyone to take a look if you want to have a more macro understanding. And briefly, lastly, to introduce about my company, that what we do is to provide CSR communications and trainings on CSR, ESG, and SDG, and we also provide PR and media services in China, the USA, and Europe. And we're hosting actually a SDG forum in Shanghai, and you can follow me on my social media accounts if you would like, or add me on WeChat if you have any further questions. And yeah, hope you enjoying the conversation today, and I'm excited for the coming up panel. I will leave the time for the other insightful speakers. Thank you very much.